So we are going to do a follow-up on the last video of how to read the charts like a pro, right? So last video, we talked about the case study of Ethereum, which is this pair, ETH, right? And if you haven't watched last video, go ahead and watch last video so that you know that this is in relation. That is what we talk about, what is about to happen, how are we going to plan how are we going to trade it, how are we going to react to it if it hits up, if it hits down, and so on and so forth. Right, so last week was kind of how we plan, and then we analyze the chart using all the stuff that we have. So this video is where we talk about the things that happen, right? And then how we can use the chart to read from then onwards, right? So if you haven't watched the last video, head on to the last video and watch it, right? If you watch it, let's continue. So ETH, we are right now on the daily time frame. As you can see, price. Last week, we were kind of talking at this area, right? We were kind of thinking whether or not will price break down, or would it, or what will happen. If it breaks down, where we go. If it breaks up, then where would it go next, right? We zoom into the 1 hour. Last week, we were, the last chart that we talked, we were kind of at here, yeah, at here. And actually around here, right? We were actually around here. And okay, let me move here. We were talking about price was as here. We were kind of talking about here, somewhat. I think it's yeah, around here. So we saw that the daily had a little curve, right? Okay, let me go back here first. The daily, the MACD over here had a little cross over here. Right, we saw that MACD has a little cross, but then again, I said that this is only one indication alone. We cannot rely. A lot of traders, you know, what they do is that, wow, they see that a MACD cross, or they see that something happened just based on one signal. They jump right in based on that signal. So, for example, we sell on the MACD cross right away. As we can see, what happened after that was that it shot up. So then you would have made a loss. So one indicator alone, it's not enough. So if you are a trader and you are basing, like a lot of times when you trade, like if you see just a signal, you go in right in, I need to put you right smack right now. I tell you upfront, no, it's not going to work. It's not going to work in the long run. Ask any trader who have been trading for a while, they'll tell you that a single indicator alone is not enough. So that is the reason why, even though I saw the crossing, right, we did not say that, okay, let's go for a sell. So when we saw the crossing, we were kind of at here. Okay, let me go to here, right? Just now I talked about, we were kind of at here. When we saw the crossing, we were kind of here. So price where it's lows. So which means that if it's going to break, what are the things that we got to do? It needs to break at least below the lows here, or below these lows, ideally, and below my white line, which is the 365. And all these lines, okay, let me draw here. It was here. So if we zoom up, the zoom up version will look like this, where you can see it better. So all these lines will act as the real rejection area, right? You can see the lows, the lows, the lows, and then we got the white line, the 365, my moving average. So this, if the crossing is going to work, like the MACD on the daily is going to cross, right? It's going to work. We want to have an additional trigger. We want to have an additional trigger in the lower time frame. That is where, should it break and close below, that's where then we will go down. Then we are trading in line with the bigger trend. The bigger trend is the daily time frame. The daily time frame gives us a signal, but that doesn't mean we go right away. We need to go on to the other time frame. In this scenario, the 1 hour time frame, right? To see that when it finally breaks through, that's where we know that price is confirmed going. But if we do not wait for it to break through, if you just enter over here, that's where we talked about last week is that. Okay, the first thing we talked about, we saw the MACD. The MACD, I repeat again, the MACD, if you compare to the previous lows over here, the MACD was this low, right? This low, marked by the red line here, the red horizontal line here. But the current low, which is around the previous low, the MACD was barely even near to it. So it shows that this is divergence, right? It shows that the strength of this downtrend, potential downtrend, is not strong. At least it's not going to break at this goal, right? It's going to need at least more momentum to go. So then I also talk about that But if this breaks up, what is holding? If this breaks up, you can see this dotted line at the top. This is my deviation 1, my Bollinger Band. You can see there. Okay, let me zoom in for you to see better. Okay, here we go. If you can see, price has been really touching this area. Touch. 1 touch, 2 touch, 3 touch, 4 touch. And it cannot break through. So usually when price cannot break through, it needs to come down to gather momentum for it to break and break up, right? But I also note that though my orange line is the area whereby you see touch, break, right? So if it hits up, it's going to get stopped at the orange line first. But if it's going to, so that is where the area of rejection. But if it goes all the way to here, this is the main trigger line that will differentiate between the uptrend, whether or not when it breaks through, then is where it's going to be a solid break up, right? So this is the one that if it breaks through, that's where you know that you want to go in for the buy, right? So you can see price went down. What happened was price went down, kind of like a double bottom, but if you look at the left, it's actually a triple, but it kind of formed a 2-bar pin, 1 bearish bar and 1 bullish bar. This is not really a pin bar, right? Combined together, it's 2-bar pin, right? Bouncing off a crucial area of my white line, my white moving average, right? And it hits up, first stop towards the orange line. That's where it get rejected. And then after that, it tests. No surprise here, because this is the major one. When it went up to test, it got rejected right away. But then it formed a pin bar to pull it back up again. And it consolidated, and boom, it broke. At this break, usually when price break through an important area, it breaks with a long bullish bar, big long bullish bar like this, to show that there is very, very strong buy momentum. And here is the point where the story changed, right? From the downtrend or the sideways previously, we were kind of thinking whether will it break down or not. At this moment, when it break above, here is the area for you to buy, right? Because this is the line that we're talking about. So if you can see, based on chart analysis, this is kind of how we traders trade as well, right? Back then, as we know that price has been up and then has been testing up and then hits up higher and then testing here. Okay, where we are right now, if we want to see the chart where we are right now, you can see if I want, I can draw a horizontal line over here, which is the highs. This is the highs. It came down to test back the old blue box, which is normal, and then went up to highs. Kind of like a double top, right? Kind of like a double top. But if it goes and breaks through the highest point above, that's where it will continue its next leg upwards, the next movement upwards. So this is now the main area. It's so beautiful because price respect this to the dot. You see, it formed a high, then after it came down, it came back up to touch the high, it spiked but didn't close above. And it kind of formed a pin. That's why the reason why it went down, right? But if it does goes up and close above the highs here, that's where you want to go in and to go for the buy again. To right this way, and that's where price will likely hit its way upward. So this is upper frame. Then of course, it will likely test the lower frame to see that whether is this break the real deal, right? It goes up, it goes down to test. It will probably test this again to show that it is the real deal, that it has officially closed above the blue box, right? Therefore, the testing is very, very much necessary. If this is the blue box, okay, let me zoom out so that you can see. Okay, the weekly. Okay, here we go. Here is the blue box, the main crucial one, which I'll recap a little bit. It will go back to test this blue box, and it got to test it. And for price to really to be confident enough to shoot up afterwards, for traders to be confident enough that this is the real move, it needs to test, it needs to get rejected, maybe something like this, right? Test, get rejected. We do not want to break it back down. We do not want it to break back down. It's not good, right? Ideally, it will do a testing like this, like what is happening over here. And then finally, it will break through the red line, which is the highs in the 1 hour time frame, right? For it to go up to the next leg upwards. Next stop, where would it go? If you want to see, there is one main rejection level, which is around the 800 level. Right, if you go, I go 800, you see? The highs, the lows, and the highs. This is the main rejection level. So there's some room for this to run, Of course, in the meanwhile, there are some small rejection along the way, but this is the main rejection. Then if it breaks through this level, then the next high will be the highs over here. Then of course, we do not want to go so high. It will be around the opening closing level, which is here. All right, so I do not want to go too lengthy on this video. This is to show how we trade as a whole. Understand the key takeaway from this video is that, number one, you don't use one trigger alone, one indicator alone to give you a clear-cut direction whether you want to buy or you want to sell. In this scenario, we use an advanced trigger in a lower time frame, right, in a 1 hour time frame, so that we know that we are not going to sell right now. But if it breaks up, where are the main crucial areas to break? And then finally, when it breaks through, that's where we know that it's likely going in that direction. That's where you want to go for the buy. And right now, so that trade has passed. We have read the chart based on at that point is done splendidly well. Right now, we are in the next zone of where price may potentially hit to. So this is kind of how we traders trade as a whole. If you are interested to learn more, head on to my site at AsiaForexMentor.com. I got a free 5-day course that is for you guys. It's for free. So just go ahead, go to AsiaForexMentor.com and just learn it from there. I have tons of free stuff, free vlogs and free forex trading strategies in it as well. So you're going to like it. See you there.